Berm Waco asks the question, Greg, can you analyze BlackBerry for me? I'll be happy to do that. Berm said BlackBerry is at a pretty low point and there is nowhere for them to go but up, right? Well, let's take a look at BlackBerry, the company formerly known as Research in Motion. Now, first off, let's look at the stock chart. And as investors, we want to look at the big picture. This is a stock chart going back about 14 years. As you can see, it's clear that BlackBerry has had huge runs up and down. Look at this. Back in 2003, the stock was around $2 a share. 2002. Up here, it went above $140 a share in 2008. So in about a 6-year period, you could have made 70 times your money. Wow, that is big money. That will turn $2,000 into $140,000, or $10,000 into $700,000 in just 6 years. What a huge return. But your timing would have to be perfect on this, or you could see that you could lose that, because the flip side of this is if you had bought up here around $140, that's just 5 years ago. Well, look at it now. It's at $10 a share. That's a 93% loss. That turns your $10,000 into what, about $700 or $800? Not good. I'd rather have the $700,000, right? Okay. This stock is clearly volatile. You want to be careful, and your timing has to be really good. There's huge risk and huge potential return with this stock. Okay, so don't put all your money on it. Now let's look at the financials. BlackBerry, over the last 3 fiscal years, this is annual data we're looking at. It's gone from $19.9 billion in sales, what's called total revenue in accounting speak, gone down to $18 billion, all the way down to $11 billion. That's a big hit. That's about a maybe 1/3 hit, 40% hit in revenue. Not good. Now, let's go down to earnings or profits. $3.4 billion down to $1.1 billion, down to a $646 million loss. Clearly, things are not headed in the right direction, and the stock price is showing that. Now, let's take a look at a bright spot for BlackBerry. The number of BlackBerry users globally has increased steadily, although it is slowing down recently. As of December 1st, 2012, they had 79 million subscribers, steadily growing. Only 3.5 years ago, they had just 41 million, almost doubling in the past 3 years. If they can just learn how to capture a profit on those subscribers, they'll be great. They can make a lot of money once again. So what has happened to BlackBerry in the past 5 years or so? It reminds me of a funny quote that I think comes from Peter Lynch's book, One Up on Wall Street, which is an excellent read, by the way. He said that imitation is the sincerest form of, not flattery, as the saying usually goes, but battery, as in assault and battery. When you're in a hot market like mobile and big competitors come along, they can really knock you off your pedestal and beat you up pretty badly. And that's exactly what happened to BlackBerry when Android and Apple's iPhone came along. They built a better mousetrap, and they're making lots of money and stealing away BlackBerry's business. As you can see, BlackBerry was a growth stock, but now it's a turnaround play. And they're still having problems. Look at that. First quarter loss this year, and a falling subscriber numbers. So that's not good. It still seems to be headed in the right direction. In the wrong direction. We need to see it go in the right direction, and I want to see that before I buy it. This is a turnaround play, and they have big competitors that have been stomping them for years. So they got to be doing something differently, or they're going to continue to get creamed. Now, I'm not an expert in the mobile industry. Okay, I am an expert on stocks. My advice to you is wait for the company's financials and the stock to show you that it is indeed turning around before you buy the stock. Just because the price is low now does not mean it can't go lower, because it can. It can go to zero. The company can go bankrupt. Okay, I don't think that'll necessarily happen, but it could. I want to see revenue and profits, and hopefully the number of subscribers also, go up before I want to buy this stock. That's the safest way to play a turnaround play. Now, I want to see them doing something better than their two monster competitors are doing. So far, as of late, I just haven't seen that happen. So right now, I would not recommend buying the stock. This is a great company to keep your eye on and watch, but I would not recommend buying it at this time. If you still insist on buying it, please do not put much money on the stock, because at this time, the odds are against you. Okay? You can see as of January 2012, their two CEOs had stepped down and were replaced by Thorsten Heinz, so they're making some changes. It talks about it right here. You gotta just watch and see if it's actually gonna make a difference, if they're gonna be able to turn it around or not. Until it happens, I don't want to buy the stock. Well, I hope that helps. Please go to markettiminguniversity.com. Get my free report. 3 things every investor must know to earn greater profits, take less risk, and invest with confidence. This is Gregg Killpack, wishing you many profitable returns.